Hey everyone, welcome back to another Market Open live stream. Look at this. The terminal login today uh, is this. It's almost kind of like a censored swear word. Let's see if we can get it to focus here. Maybe not. Okay, fine. I'll try maybe this one. How about that? Is that gonna work? It's almost like it's saying oh wow, it just turned off like conveniently as you were able to see it. Yeah, I haven't seen that one before. Last time I had something that resembled a word, it was pray right before the market crashed. Now it's a censored swear word. And that was a year ago. So I don't know if that's a bad omen or if it's actually good. Although I don't know what respects it could be good. Oh well, I'll have to put some thought into that one. What I make of that. Maybe y'all in the comments have some ideas about that one. But anyway, welcome aboard. A lot of a lot of talk about the jobless claims report potentially just being a big old either seasonal adjustment or not such a great thing. The jobless claims data, which comes in every Thursday for the prior week, did come in at 286,000. We were expecting 225,000. However, this is seasonally adjusted. Unadjusted jobless claims actually declined. So it's kind of like, all right, like how much do we really read into that? Probably not too much. We do have Omicron, kind of to some degree makes sense. And it probably means that the numbers we were getting in December that were showing such low jobless claims were probably a little too low. But you've got at the same time some reports out, some surveys out that the economy might be slowing a little bit, but actually not slowing as much as expected. And I think that's giving markets a little bit of excitement or hope today. Though I wouldn't be so so bullish just yet. Again, we've seen this a million times before. Let's see here. It was Philly Fed and Empire survey, and both of them surprised to the upside. We were expecting a read of a 23.2, for example, on the Philly Fed. I'm sorry, we were expecting 19. We came in at 23.2. This measures things like new orders and manufacturing. And really the goal was to see, hey, like, is our economy screwed? And I think that's the big fear, especially after we got that manufacturing data out of New York, that things were slowing because of Omicron. I think there's a lot of fear that we're going into a recession, because really what we're seeing with this madness about rates is in my opinion quite extreme what we've seen in the market because of rates. I think more is getting priced in. I think there's serious fear that we're almost in this realm of, okay, you know what? Market's down, Nasdaq's 10% off highs. Time to start pricing in the end. Price in recession. Get out now before it falls a total of 30%. And who knows? That could still happen. But I got myself Topo Chico, so it's all okay. All right. So let's get a little bit of a feeling of how the day's starting off, and then we'll look at some of the other news. I did think it was really interesting. I saw this. Mitch McConnell was able to raise almost $10 million in a single night in a DC fundraiser. My goodness. Could you imagine? It's like people handing you $10 million. Go keep Nancy Pelosi in check. Yeah, here's $1 million. And then like 10 of those sorts of people. Or like 20 people. Here's 500 grand. Go keep Pelosi in check. Make sure Schumer settles down and doesn't get anything done. Kind of crazy in the politics. Oh my gosh. What do they say? The ones with the gold, like the golden rule is the ones with the gold make the rules. Yeah. Anyway. All right, so what we got here? We got the Nasdaq futures actually up 1%. Oh man, I don't know. We'll see. We'll see if we believe it. We've got. I guess I'll believe it when we don't crash the first 10 minutes of the market being open. Anyway, Dow futures up a third. S&P futures up nearly a half. Let's go take a look at bonds. Bonds 1.825. So it's not like you got this giant plummeting in bonds here. Yeah, well, we'll see. All right, jump on over to Bloom, and then we'll look at some. Yeah, Gensler trying to Gensler on crypto, man. Look, he's regularly calling for more regulation. He's regularly calling for more investor protections. At this point, it's kind of just an eye roller. It's like, all right, we know, we got you. Hey, you know what? At some point, Congress is going to have to come in and do something. The problem is, I really don't know how Congress is going to regulate something they heavily don't understand. I have no idea. So while I'm optimistic for appropriate regulation, it's quite incredible how ineffective our government is at actually doing the thing it's supposed to do, which is governing. But then again, maybe that's not that much of a surprise. So anyway, let's see here. This is interesting. To tame inflation, the Fed needs to get into your head. This all comes down to that psychological approach of if you believe that inflation is coming, then you basically need to buy more now to get lower prices. That almost kind of be like if you wanted to buy, let's say, a course or something like that because you knew the price was going to go up in 8 days. That'd be crazy. But it's kind of like that. But anyway, the Fed's trying to do the opposite. The Fed here is trying to take, just judging by this person's opinion. So this person's opinion is that the Fed's trying to do the opposite. Hey, let's come out with this insanely bearish report, but now it's time to get really serious about inflation and basically send the signal that we were wrong about transitory inflation and U-term. Maybe, it's actually an interesting argument. I also, in fairness, haven't read it yet, this person's argument. But to some degree, if you could convince investors that inflation is transitory, then or it will be transitory because the Fed's going to act really tough to force it down, then maybe you get a little bit of less buying pressure because people are worried about a recession. And folks, what do people do, and what do businesses do when they're worried about a recession? Like seriously, what did you do in March of 2020? Think to yourself, what did you do then? Well, that's what businesses do right now. And that's what people do right now. They spend less. In fact, it's been something that I've been saying in our course member live streams for about 7 weeks now, maybe even 8 weeks now. Start spending less, figure out how to make more money and get more money into the market when and if the market falls. That's one of the beautiful things that a lot of us do have control over is our pocketbooks, right? Like if you get really tight when the market is slower, you have more of your paycheck left over at the end of the week to get more money into the market. Again, it always feels like throwing money onto a fire pit when the market is hurting, but it's tend to be some of the best times to buy. All right, so. Let's take a look at the argument here. Confirmation hearing, blah, blah, blah. The assertion echoed by Powell's perspective, number 2, in her own appearance before Congress last week, puts the Fed's policymakers at the center of debate. Okay, where is the point? Fed officials are walking a tightrope. As they lay the groundwork for a series of rate hikes. They're heeding calls to quell inflation to quell the faster CPI or fastest CPI reads in 40 years. Inflation expectation doctrine that's dominated mainstream economics since the 1980s offers one potential way to square it out. Ooh. The idea is that the central bank can convince businesses and consumers that it will maintain low and stable inflation, then it won't have to do much else. Remember, folks, when the Federal Reserve said they were going to bail out essentially the bond market, which was in some regard seen as, oh, the Fed's coming in to bail out the stock market because they were providing so much liquidity to businesses. When that happened, a lot of stocks actually U-turned relatively promptly, just on the anticipation that the Federal Reserve was going to act. And why? That's because expectations about where prices are headed are thought to be a major driver of inflation itself. If workers don't anticipate higher inflation, they won't demand a bigger wage increase to make up for lost purchasing power, nor will they rush to go out and buy things because they expect them to increase in price, leading to a self-perpetuating upward spiral. In other words, they don't do that if they don't expect inflation. And it's telling that was the Fed's mistake during the 70s. It lost control over the inflationary psychology of the American public to the point that taming inflation required draconian interest rate increases that plunged the economy into recession and threw millions out of work. One thing we certainly learned from history is that once you adjust people's expectations, they can become quite entrenched. And so it's difficult to adjust them in the opposite direction. Yeah, I mean, if you ask most people today what their thoughts are about inflation, it's out of control. It's totally out of control. Even look, we know that in the markets there are two theories. One theory that inflation will be transitory eventually, and the other theory is that we're going to hyperinflation and a recession like the 70s, and then of course the truth will probably be something in between those two. That means a lot of normal folks have probably feel like at the moment the Fed's lost the plot. People who aren't in the midst of making or coming up with opinions on each side. That'll be really interesting. So okay, yep. Good points. Now with the Fed's expectations, okay, Michigan have risen a bit, but not nearly as much as prices have. One of the things that I love doing, and I recommend it, really regularly. But anyway, look at here, 5-year inflation break-evens. I wonder if can I get an updated chart on this? The problem is usually the break-even rate doesn't update as much as I'd love it to on these, so I have to go. Let's see. It's 2 days old. Let me get it. But the point here is that when you look at this particular chart, it can be a way of measuring what the markets think about inflation and inflation coming. So, for example, when we had this surge here from December on the 5-year from 182 on on expectations, when we had that surge from December of around 1.82 to this 2.5 level, that sort of panic was assigned to markets that, oh no, we must be concerned about inflation. And we had some pretty solid pain that started in February, March, April, May. And we didn't really start having a better market until those inflation expectations settled down a little bit. Well, we had another little surge here towards the end of November, and it seems like there's always a delay in when the market reacts. Like, take a look at this. It's almost like a leading indicator to some degree in this market, which is actually kind of what you want. You want leading indicators in this market because otherwise you're behind all the time. And you're like, oh no, why is the market falling? It sounded a little Grinchish. But anyway, so yeah, I mean, take a look at this. You went from 1.82 on December, or in December, to 2.37 by Feb 16. Market starts having its pain right here. And here, same thing. We actually had a rally during the first 3 weeks of November. And the pain didn't actually come until afterwards when these break-evens sort of leveled off a little bit. It was almost like this hindsight realization of, oh no, inflation expectations are up again. And then, of course, you get the CPI reports and all that. Let me see if I can get an updated chart. 5-year break-evens. Of course, I can get an updated chart. It just takes a second. No problem. Line chart. Okay. Okay, the easiest one to look at is a 2-year because it gives us a little bit of a view or a similar view to what we just saw here. Okay. So this is the 5-year, which is the one we were using there. Okay. So just as an example, come here. There we go. All right. So here's just an example of the 5-year break even. And here's that run up we were talking about from December to March. And here are some of those spikes that we saw around October and November. And this is what we've been seeing recently, is this settling down that we certainly haven't been continuing to the upside as much. Anyway, kind of cool. Okay, so what now? Yes, sticks. All right, so let's see what we've actually got going on today. Okay. Ooh, what do we have going on today? Look at this, folks. Alibaba and JD.com up 6.6 to 6.7%. So you got a nice little movement there in Chinese stocks. NEO up 3.21%. SoFi's up 3%. Etsy's up 3.8%. Lucid's up almost 5%. It's incredible. Cloudflare 2.8. Roku's up 2.36. Let's see. We've got Tesla over here at about 2%. And looking towards the downside, you got Ford's down about 3%. Vinco Ventures, EXPI, 1.8%. Not a lot of red. I mean, this is barely one full page of red here on Webull. But we've seen this story play out many a times before. So we'll see what ends up actually happening. All right. So let's take a listen into, well, I guess we can look at, yeah, let's go explore a little bit more news and see what we can get to the bottom of. Let's see here. Okay. All right. So we've got about 5 minutes to the bell. Let's learn a little bit more. Let's try the journal. All right. Talk about this jobless claims. We already know this. Then we've got, all right, what the metaverse has to do with Microsoft's deal for Activision. It's actually interesting. Let's take a quick peek at this here. All right. We'll sign in quickly. All right. 1 second, and we will be signed in. Groovy. It's one of the most toxic things is passwords. But that's okay. We'll get in there. I don't know why they always have to sign me out. It's just a news website. It's really not that complicated. It's not like it's a bank. I got it. Gosh, toxic. You still, even though you pay, you still get the big giant Zoom ad. And look at that. It takes up like 60% of the screen. Okay, maybe not that much, but anyway. Beyond Meat jumps 9% on a report of expanded mech plant tests at McDonald's. All right. So 3 minutes to the bell. When Microsoft disclosed plans to buy Activision Blizzard, the company described the $75 billion deal. Oh, now it's $75 billion from 69. As a pathway to the metaverse, tapping a trendy topic. Ooh. During a 15-minute investor and media call shortly after the announcement, executives from Microsoft and Activision mentioned the metaverse more than 10 times. Wow. When we think about our vision for what a metaverse, can be, we believe that there won't be a single metaverse. We need to support many metaverses. Oh no, the multi-metaverse. Everybody's always wondered when we're going to see a multiverse, or if there's a multiverse. You're about to see the multi-metaverse. What a riot. It was analysts who followed the company, Microsoft's said. It was analysts who followed the companies. Oh my gosh. It was analysts who followed the company said Microsoft's way of positioning the booming game business as the on-ramp to the metaverse. My goodness, why is that the most complicated sentence I've ever read? A future of the internet that has been the subject of growing hype in the metaverse. Blah, blah, blah. Okay, video games are an example of how the world might look. Yeah, I mean, so far, I really think metaverse is just a rebranded video game land. With skins and avatars that you can pay money for. I don't know. Some people say that Microsoft is just blowing smoke here to cover up the fact that they really are kind of bailing Activision out of the sexual harassment scandals. It were multiple settlements from 2016 and 17 about sexual harassment claims that were never reported to the board of directors. Even one instance of rape. And Microsoft is like, do we cut ties with one of the biggest developers of our Xbox platform, or do we just buy them? And then let's just say we're doing it because of the metaverse. Who knows? Who knows? It's maddening. It's kind of also maddening because I'm trying to take a little bit more money out of my margin account, but JPM is literally sucking. For the last 45 minutes, it's just been, this part of our website's not available. What a garbage website they have. I can't, how am I supposed to ever be able to recommend that? I don't know. I think the better thing to recommend is the programs linked down below on Building Your Wealth. You get all my buy-sell notifications. Or you could also consider, if you want, just join Discord or metkevin.com/chat. Alternatively, you can also check out StreamYard. Go to metkevin.com/StreamYard.
It's AMTD International celebrating the acquisition of L'Officiel at the NASDAQ. EcoWave Power Global, a wave energy technology company. Jim, I know you've been watching the oils as we get a little bit of relief on crude today.
All right.
Some pretty impressive output numbers in the Permian, at least.
I don't know. That was about 80% green. Let's see what we actually have in the market here. If there's any excitement, or if this is all fugazi again, and we're gonna go right back to the toileta. Okay, so why is pre-market data off? There we go. Okay, so slight green candle here on the SPY. Let's take a peek here at Etsy. Etsy, we actually got a little bit of a red candle coming. This is not a surprise. It seems to be the MO is rally a little bit pre-market and a little bit of a red right at the beginning. But the first minute's always the most volatile, so we'll be patient. We won't call any directions yet. Lemonade rotating up about 4% here. Very nice. You've got Enphase, Embraer, Net. They seem like they're all moving about 3%. And let's see. First Solar, 3% here as well. I really want to watch the candles here right at the beginning. Yeah, there we go. Okay. So a little bit here as well. It's not working. No, it's still not working. Okay. So hold on. There's a firm. Okay. How about Kathy's? This is the inverse of ARC, so that means ARC must be doing decently. Let's go to ARC. Okay. Okay. ARC's doing not bad. Trade Desk. Okay, good. A little bit of green here. Oh, it's working now. The problem is it's always so slow, though. Nope. No, it's not. This part of our site isn't working right now. You freaking morons. Seriously. Just, Chase, you suck. That's all I could say. Oh, but anyway, I did want to say, yes, if you want to learn more about how I do my streams or the software that I use for all my streams, make sure to go check out StreamYard and see all your comments up here. Like Rob suggesting that's it. We're back to another bull trap. But that's okay. Go to mettkevin.com/StreamYard. Learn more. Link below. Let me make sure it is linked down below. But anyway, in the meantime, let's look at the SPY here. All right. That's pretty good. 0.68, you know, that's a good start. It makes you wonder, hey, is this that bounce off of the 100-day moving average for the S&P that we were kind of expecting? We talked about this yesterday about you know, when you hit that 100-day, it could be a great sign to buy. So let's see here. It's in the gym for a moment. Let's see what he's got to say.
Say that they are looking to reduce their carbon footprint significantly or get to carbon neutral. They use different language than the fossil fuel companies.
Yes, they do.
And we have this for you as well. Hopefully we can bring this up because we were talking about this the other day. The ExxonMobil news got lost a little bit because we had such a busy news day on Monday. It should have been the most
important news that day in oil.
And it was a huge deal. But the language here is Chevron sets net zero aspiration, right? So they have an aspiration for G intensity target. ExxonMobil announces its ambition for net zero greenhouse gas emissions by 2050. Shell's target is to become a net.
Okay, let's hop on. Let's hop on over to here. Take a look at this. A little bit of a run there on SoFi. Just ran up to about 6% here. You've got Lemonade up about 5%. So definitely a move to the upside. Enphase, a move to the upside, about 5%. Neo, about 4% to the upside. Affirm, 4% to the upside. Solid numbers here. Roblox, 4% as well. DocuSign, 3.35. Good. Nice little rebound. Not a lot of pain right now. It looks like the only painful position here is Ford, down about 3.25%. Kind of rotating down a little bit more, but seems like very, very little red right now. Let's see here. Yeah, if we go over here, TMC Metals, ooh, down 15%. Kind of wonder what's going on over there. We'll have to do a quick little peek as to what's going on at TMC. Let me do that really quick. So let's see here. TMC, the metals go. Okay. Okay, Wall Street. No, there's nothing. Is it? Can it really be? TMC Metals price cut? No, there's a price cut a week ago, but I see like nothing right now that would suggest that much pain right now. Yeah, that's crazy. Is that right? Yeah, this is down 15%. That's wild. Okay, all right. Gap down about 1%. Otherwise, not much pain here. Okay. Let's look and see if the SPY is keeping up. SPY. Yep. This is just like so classic at this point. You get this optimism, and then it rotates back down. Yeah. Well, I guess that's tentatively the style of market that we have. Very short-term optimism. Let's see it. One sec. I said a quick thing here. One second. There we go. Little complaint email to JPM. It's very frustrating. So you can't trust them as far as you can throw them. All right, whatever. So okay, so what do you got here? AMC started out up, kind of rotated down. It's basically flat right now. Nvidia rotating down again here. Sunrun running a little bit here, and so SoFi, but SoFi also chilling out a little bit. Let's go here to Tesla. Tesla's got 2% on it. Matterport's got 2% on it. This is like the classic thing that we've seen in this market is convictionless. Not very exciting. You get like 2 minutes of excitement with these green charts, and then it rotates. Josh, my birthday, the 28th. Thanks so much for asking and for donating $2 to ask. Palantir, yeah, let's take a look at Palantir. How's Palantir doing right now? Hey, it's just moving a little bit here. 2.61% to the upside. Nice. How about the NASDAQ? Can we get the QQQ? Yeah, look at that. It's just so mad. Convictionless style rallies. That's nuts. All right, somebody wants me to look at German producer price index. Oh, nice. German producer prices register a 24.2% jump in December. German producer prices rose 24.2%. Well, I wonder how much that relates to a pit, though, of last year. Not trying to find excuses for it, but I do wonder if there was just like a massive hole in this chart last year. PPI, let me see, PPI Germany. Maybe I can, if I could get a chart, that would be most ideal. PPI Germany. Yeah, here we go. Let's see here. So 2021 December, not really. That's crazy. 24.2%, record annual jump driven by higher energy prices. Largest year-on-year increase for any month since the statistics began, the Federal Statistics Office began compiling the data in 1949. December figures marked the third consecutive month of very high numbers after October and November showed an 18.4% and 19.2% respective increase. Wow. Energy prices were up 69% compared to December of 2020. That's wild. December, 2020. So you would look back to 2020, not 2021, because this is the report from 2021. Anyway, wild. All right. So, let's see what else we got here. Okay, so NASDAQ coming back a little bit of enthusiasm trying to come back or keep the market up. Again, I throw up all these comments here with StreamYard. Just go to metkevin.com/StreamYard to learn more. So probably Biden's fault for Germany. Oh, gosh. Thoughts on market reaction if Russia invades Ukraine? Yeah, this is something that we've put a lot of thought into, and a lot of people ask about. I don't know how substantial the market, how substantially the market would react. I don't think too terribly ugly. I do think there'd be some reaction, but I think it'd be limited. I think the bigger question would be, how much is it likely to affect the U.S. economy? Could it derail the economy? And the answer to that is likely no. But anyway, nice moves here. Cloud, look at that. Even Cloudflare up 6% right now. TDoc, ChargePoint, Baba, Affirm, very nice. What do we got here? 4.86% on Affirm. I can't even click it. There we go. 4.86% on Affirm. Let's see. Nvidia here, coming up 0.5%. The SPY's really dancing around here. There we go. A little bit of a push. Okay, good. Somebody here says, would you buy SQQQ as a hedge? No, not at these prices. I really believe, and we talked about this yesterday. I really believe the time to hedge is when the market is at euphoric levels. I mean, this is a joke. This is like a little ripple off the bottom. Prices are still so ridiculously low. I would have bought a little bit this morning. Even right now, I don't care. It doesn't matter if it's up 2% or 4% or whatever. If I could just transfer but I can't because Chase sucks. Yeah, it still literally still says, it looks like this part of our site isn't working right now. Please try again later. Thanks for your patience. It's so cancer. Like that is so wrong. Like, could you imagine having a broker that did that? I mean, just, I mean, that's almost like Robinhood turning off your ability to trade. You know, not to say that it's that bad, but pretty frustrating. So I had six moves written down, and now I have to wait to be able to do them. And whatever. So anyway, when I trade those, I'll send an alert out in the Stocks and Psychology of Money group. For right now, I just have to be sad and sit around and wait for it to function. But anyway, okay. So let's see, Corsair. I might just call them in a few minutes. That's probably what I'll do because it's so annoying. Yeah, sorry, it's frustrating. Anyway, let's go to Bloomberg. All right, any news over here? Goldman Sachs, Citi asking London staff to return to the office. Ooh, that's actually like the opposite news that we've been used to. That's pretty incredible. Yeah, let's try a different browser. I have tried that. I've tried different browsers. I've tried different phones. Tried it all. This is just Jamie Dimon not prioritizing having a good trading platform. You know, and these companies these banks wonder, oh, why do we have lower trading revenues? Well, maybe if your systems didn't suck and weren't antiquated garbage, people would be able to trade more on your platforms. It's so bad. Yeah, no, just try it again. Same thing. Anyway, let's see here. Somebody says they're buying a put on everything right now. Oh, try a different bank. Yeah, no kidding. All right. Any plans to watch the congressional hearing at 7:30? Yeah, I'll probably 2x through it, and then who knows? Maybe we'll do a video on it. Yeah, tried iPad, tried iPhone. No, we don't have to complain about Chase any longer. Bank of Russia seeks to outlaw mining and trading of crypto. Gotta love it. More to FUD. But that's quite normal at this point that you're going to get some of this. Although Russia was one of those that originally said they weren't going to ban. So kind of interesting here. Let's see what they said. Central Bank of Russia proposed a blanket ban on the use and creation of all cryptocurrencies domestically. Wow. Cryptocurrencies bear the hallmarks of a pyramid scheme and undermine the sovereignty of monetary policy. Wow. Okay. Posing a threat to the Russian financial system. Potential financial stability risks associated with cryptocurrencies are much higher for emerging markets, including Russia. The hard line against crypto dovetails with the position of Russia's powerful security services, which also back a complete ban domestically. Wow. All right. Whatever. Way to go, Russia. All right. So what do we got over here? Corsair rotating down a little bit. BTC's moving up. A little bit of a slowdown here on some things. SoFi still doing very well, getting to that resistance line. It's Cloudflare back to 100. Lucid's got a nice little push here. Etsy, nice push. So does Enphase. It's not holding on. It's not as resilient. There we go. It had a nice S&P push here. Taking a little breather again here. Now at 0.75%. QQQ 1.4%. So nice little rally here. Okay. Let's see here. NASDAQ rebounds 1% after falling into correction territory. Yeah, nice. Let's see bonds. Bonds actually, I would say it's mostly flat. There's not much to really see here. Carl Icahn owns a 4% stake in International Flavors and Fragrances. he gets a red banner. Tell that to El Salvador. What Russia's doing. That's funny. Do you think the U.S. would ever consider banning cryptocurrency? No, I don't think so at all. They want to tax it. That's what they want. They just want to tax it. Very nice recoveries here. Apple, Tesla's at 3% now. Really, really nice. Okay, I'm going to go. I'm going to call Chase. I have to say, sorry, I'm ending this live stream like 13 minutes early. And check out the programs of Building Your Wealth down below. I send all my alerts on what the heck I'm doing or trying to do as soon as I do it. And yeah, we'll take it from there. Thanks so much. And make sure to check out StreamYard, link down below. Go to metkevin.com/